Good morning, everybody. Welcome to the live morning show, Live Market Open. I'm Yohay, Elam, Forex Crunch and Market Movers, doing the show as usual for FX Street. Welcome, everybody. As usual, we'll cover recent developments in markets. Quite a lot to talk about, cover various charts and levels, keep you up to date with the US elections, which finally have some kind of impact on markets. Our currency of the week is the Australian dollar. And before we wrap up, we'll preview the next week, next 7 days. Okay, and of course, your questions are always welcome. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, and I'll take the opportunity to remind everybody that FX Street is back with a new edition of Trader of the Year. It's a demo contest, a competition sponsored by Handtech Markets, and you can win Forex prizes with a total value of 16,500 USD. For all the information, go to fxstreet.com/info/con. FX Street. Markets, well, last time we met here last Wednesday, it was the day of the Fed decision. So basically, the Fed did not change rates as expected and left the door open to a rate hike. Talk about this for a bit more. So we had the Fed released new forecasts, expectations, employment, very low growth in the next few years. Just to they downgraded it from, which was unrealistic if they didn't raise rates, to just one. That means they left the door open to December. In addition, in the statement, they added a phrase saying that the case for a rate hike has strengthened, but they're waiting for more evidence. Okay, also expect to raise rates this year. Yellen repeated this. What was maybe surprising is that, okay, they sound a bit more hawkish, and we had three dissenters, voting members voted for a rate hike. Even Eric Rosengren, once considered a dove, voted for a hike. But on the other hand, they were hawkish, if you want, bullish on the short term, but in the longer term, they sort of downgraded the long-term interest rate to 2.9%. And this means also that they're worried that this new normal low growth will stay with us for a long time. Dollar went up, went down. I still see the US dollar as the cleanest shirt in the dirty pile. That means other central banks are easing. The US central bank is not on the path to tightening. So the US dollar still has some kind of an advantage. Okay. So that's regarding the Fed. Another thing on our agenda of busy events, cover from last week. We did cover it in the previous show. It was just after the Bank of Japan's decision. In the short term, they didn't make any big changes. No change in the interest rate, minus 0.1. No change in the level of QE, 80 trillion is the level. But they're now targeting long-term interest rates and basically doing whatever it takes. So leaving, so it's a very open door policy, and this could eventually weaken the yen. In the shorter term, we've seen the yen strengthening as there was no immediate action, and there are many things to worry about in the world. So we have dollar yen hovering above 100, and we'll reach the charts soon. U.S. presidential debate. Okay, we have a special segment on this, but as a headline, according to immediate polls held afterwards, Clinton won the debate. Now, winning the debate doesn't mean she'll gain more votes, but that's usually correlated. And we have seen some reaction in markets. We have seen the yen weakening, and it's because there's less need for a safe haven currency, and the Mexican peso strengthening. Okay, we don't usually talk here about Mexico's currency, but it was quite a strong reaction, albeit in the Asian session. Okay. Another thing in the headlines that is moving markets, the Algiers Oil Summit. It's a big conference, not an official OPEC meeting. There are better intentions. There are discussions between Iran, Saudi Arabia, and Russia. These are the three main countries about some kind of oil freeze or oil cut. All the rest, of course, want other countries to cut, and other countries are much smaller in terms of production. So far, there's no deal. This meeting continues. This might lay the ground for a deal in November. I cannot rule it out totally, but at least for this event in Algiers, I think my expectations are low. We're seeing how it moves oil prices every day. And when oil prices move, also the dollar moves. Why? There is a negative correlation between oil prices and the US dollar. If we have higher oil prices, the US dollar weakens, and the other way around. So if we see a nasty breakup of negotiations in Algiers, we can expect the dollar to rise, okay? And if we have some kind of deal, or at least positive talk there, it could help. Remember that OPEC currently is only a third of global production. It used to have much more power. And of course, I think any deal without Russia will be meaningless. In any case, if there will be a deal, US oil production will probably rise, as higher prices will trigger more production. Okay, so these are sort of the big stories on our headlines. Let's see if there are any questions, and then we'll continue. Yeah, thank you, Adinda, for mentioning the contest. Also here you have a direct link. Good morning, Ed. Haven't seen you in quite a while. And good morning, Luca. I haven't seen you as well. So good to see everybody here. Let's continue with some data just to get you up to speed. It's a bit mixed. US jobless claims look good at 252,000. They remain low. Again, the US jobs market is the bright spot in the economy. Existing home sales missed with 5.33, but new home sales beat with 609. All in all, housing is also okay. USCB consumer confidence yesterday, that was surprising, positive surprise. It jumped above 104 points, and that is the highest level since 2007. Now, that was good news. Didn't have much of an impact, but hopefully it will result in better retail sales for the month of September, making a better case for a rate hike in December, after the elections, of course. And more data. Eurozone manufacturing PMIs, well, PMI is mostly good. Rising German manufacturing PMI, which is the most important figure. Remember, PMIs, purchasing managers indices, are forward-looking indicators, and it's good to see them moving up. Also, another positive figure to complete the picture, Germany's #1 think tank, IFO, published its business climate measure. It jumped to 109.5 after a disappointment last month. So it's also a forward-looking figure. All in all, the German economy looks positive. On the other hand, in Canada, we had some data on Friday, and we had misses there on retail sales and CPI. Okay, let's look at what we have today and then move to the charts. I'll skip over this slide. So today is quite a busy day. We have durable goods orders in the United States. It's a measure of investment, which is, of course, very important for the Fed. We have a testimony by Janet Yellen. I hope I don't have this mistaken. And we have James Bullard also speaking, also a Fed member, of course. So, yeah, Yellen testifies at 2 p.m. GMT. That's 4 here and 3 in London. Okay. At 2, well, Bullard talks afterwards. Well, of course, less important. Mario Draghi is now in Berlin. He's going to testify behind closed doors to a parliamentary committee. The German finance minister, Wolfgang Schäuble, encouraged lawmakers to present tough questions to Draghi. They're not the best of friends. And he'll also make a public appearance at 2:30 GMT. Remember, these closed-door meetings with politicians are never really closed. There will be intentional leaks throughout the event. 90 minutes, I think he begins around 1:30 GMT. Not exactly sure about the time, but anyway, the public appearance after the testimony will be at 2:30 GMT, but we can expect rumors to fly all day, and then he'll talk. Basically, there's a clash between Draghi that wants governments to do more, and well, German politicians that want the ECB to do less. They're more conservative on inflation, and some see his policies as too lax, too easy, and too dovish, and he sees their thrift as dangerous because, well, bond yields are so low, and he uses the words they have fiscal space to move. Let's put it this way. Coinciding with the Algiers meeting this time, the oil inventories will complete our big events at 2:30 GMT around when Mario Draghi talks. Tomorrow is also a busy day. Tomorrow we have another central banker, Kuroda, speaking. Okay, so this completes the picture. Yellen will probably not say too much. He doesn't rock the boat, but you never know. She'll be asked tough questions. Kuroda, he talks a lot, so we can lower the expectations there. I think the most interesting speech for me is Draghi's. We also have tomorrow inflation figures from Europe coming out from Spain, coming out from Germany. Of course, these shape the all Eurozone figure. We have German unemployment, which looks really great. The number of unemployed continues falling there. And finally, US GDP concludes the picture for the second quarter. We're expecting a small upgrade from 1.1 to 1.3. Not that significant. And all eyes are already now on Q3. Did the US economy accelerate in the third quarter after 3 quarters of very poor growth? Okay, that's the big question. Yeah, jobless claims as usual, and pending home sales, well, probably the least important housing figure, but you never know what moves markets if there's a big surprise. On Friday, the last end of the month, the last day of the week and the quarter, Chinese Caixin manufacturing PMI, the independent measure. We have seen some improvement in China. We'll talk about that regarding Australia. We have the final GDP in the UK. It doesn't usually change too much, and it's pre-Brexit. That means 3 quarters ending in June. The Eurozone inflation figures, maybe Draghi already has them, who knows? Probably not. Anyway, it should be interesting as well. That's one of the reasons that the ECB expressed some worries last time. Canadian GDP, always the end of the month on a monthly basis. And the Fed's favorite inflation figure, the US core PCE. Okay, that's at 12:30 GMT. Okay, these are big events for this week. Remember, on Friday, because it's the end of the week, month, and quarter, we'll have the usual end of month move. That means some crazy moves in markets towards the close, especially around the London fix at 3 GMT. That could cause some action, which things can settle down afterwards. All right, so if you see, so trade with care on Friday. Okay, before we move to the charts, see if we have some questions here. Hi Ramon, good morning. Need to see you more often on FX Rate. Yeah, we'll have a live coverage of the GDP on Friday. So that's the next time you can catch up. Anyway, thanks for the kind words. Go to the charts. As usual, we'll cover our regular charts and also oil prices. WTI crude oil will begin from the top. The world's most popular currency pair, euro-dollar, has been in a frustrating range. We focused on euro-dollar last week. Anyway, it hasn't broken out. It was more wishful thinking than reality. So what big lines should we watch out for? Currently, we're entrenched in range, hugging the 112 level. On the downside, we have 111.20. 111.20, as you can see here, is a double bottom, and that's significant support. And further below, we have 109.16, which was a low a few months ago. And under that, we have the post-Brexit low of 109.10. Okay, below that, we're back to levels last seen in the spring, maybe irrelevant given the current tight ranges. On the top side, it's quite a struggle for the pair to move to the upside at maybe 112.80, some kind of resistance. But really strong resistance is at 113.70, the line seen, at the end of August. Further above, we have the pre-Brexit high of 114.20. So for euro dollar, 114.20, 113.70, 112.80, 111.20, 109.60, and 109.10. Let's continue with pound dollar. Pound dollar has been struggling because of all the talk about a hard Brexit. Anyway, 130 is a line it's flirting with. I can't say it's support. Anyway, on the top side, we have 130.60. which isn't as strong as it used to be, but it was a bottom back in at the end of August, followed by 131.30. Okay, weak resistance 132.80. Well, more significant line there of resistance. 133.50, another stepping stone on the way up, and 134.50, not the post-Brexit high, but the highest level we've seen in September. The post-Brexit high is 134.80. The post-Brexit low, the 31-year low, is 127.90. So we're basically around 130, looking for a new direction also here. Dollar yen. Dollar yen has been hovering above the 100 level, making it even stronger as support. Okay, round numbers are not always natural support lines, but look how the pair is unable to break to the downside. If it does break, we have 99.50 level seen back in August, and then a stepping stone on the way down to the post-Brexit low of 99. To the upside, we have another round level 101, followed by there we have quite a wide range. Next resistance 103.40 and 104.15 as another level of resistance. If we move even higher, of course, 105, a round number, will be watched. Okay, remember that maybe the pair is afraid to fall because of potential BOJ intervention. Dollar CAD, not only about oil prices. This week we have GDP. Canadian dollar has shown some weakness. Anyway, currently 132 is the current level. 131.40 is some kind of support. 130.80, a veteran line, a quite weak support at the moment. But 130, the round number, is very strong line of support seen in September and also around the end of July, beginning of August. Further below 129.10, well, not as strong as it used to be, but 128.30, a veteran line, maintains its strength at the end of August, early September. Further below 127.50 is sort of our last line of support for now. On the top side, we have 132.40. It's a level as we've seen recently in September, followed by 132.80 and further above 133.10. So it's quite busy on the upside, a bit more spaced out on the downside. Dollar CAD has been quite all right in terms of technical behavior. Aussie dollar will focus on the Aussie a bit later, but anyway, moving a bit up, 76.80, higher resistance, the round number of 77, followed by 77.40 and 77.65. Quite a lot of lines here. Ranges have become narrower. To the downside, the round level of 76, followed by 75.30. Also 75 is there, round but not that strong, and that's followed by 74.40 and 73.75. Australian dollar is trending higher. Kiwi dollar currently 72.80. Well, I forgot to mention we had a great decision in New Zealand last week. Just was around the Fed, totally overshadowed as they raised the rhetoric against the strength of the currency. Perhaps it has topped out, but certainly not falling. Anyway, lines to watch out here: 73.60 becoming stronger resistance, 74.10, another stepping stone on the way up to 75, which is the holy grail. On the way to the downside, 72 is very, very, very strong support, followed by 71.60 and 70.80. If we look below the 70 level, if the Kiwi collapses, 69.50 is a strong line of support. Okay, but basically the Kiwi is in range 72.80 to 73.60. Those are the main currencies. Dollar Swiss. I updated the lines here, mostly proxy of US dollar strength, but of course there's intervention by the S&B. To the downside, weak support, I would say, here at 97, just under current levels. Stronger support at 96.50, much further below 95.30 and 95.20. Ranges have become a bit more narrow. On the top side, 98.20 worked as resistance in September, followed by 98.50 and 99. Euro Swiss not going anywhere fast. Of course, this is the cross that the Swiss National Bank is targeting. So support at 108.50, followed by 108.20 and 107.90, which might be the line in the sand for the S&B to act. On the top side, 109.10, 109.60, and the round number of 110. All in all, extremely narrow ranges in this cross. Euro pound, lots more excitement over here. Currently battling 86, a round number, not sort of a pivotal line. 85, another round line is to the downside. Strong support at 84.20, and last line here is 83.30, last seen in early September. On the top side, we have 86.50 and 87.10, which was the high level in September, and also almost the highest level in August. All in all, of course, Euro pound moved up after Brexit and settled in a higher range. Euro yen is falling, lots of strength in the yen. Currently at 112.60, there is support at 112. We've already seen a dip below these levels. Anyway, 112 is a strong line, followed by one to the top side, 112.80, 113.80, and 114.50. But real resistance only at 117, which kept the pair quite strongly in August. Okay, and the dragon, last but not least, 131 at the moment. It had its time in the sun. It's keeping a safe distance above 129, which is support. Further support at 128. To the top side, we have 133.10, level that was significant immediately after Brexit. 134.40 is some kind of resistance, I would say, well, not that weak. And 137, weaker resistance, strong resistance at 139. We've been at higher levels post-Brexit, above 140, but there's a long way to go. Currently at 131, sort of leaning to the downside. Oil prices, WTI crude oil, currently 44.65, off the highs. I think we have here a downwards channel. In August, we ranged between 39 and 49. After that top, we began falling to the downside. Under 49, we have 46.50, which was the top in, well, we can draw further lines here, but 46.50 has been the recent high in September. 45 is a level the pair loves to hug. Below that, we have 42.70, 41.10, of course, the round number of 40, and 39, which was the low back in August. Okay, so these are the levels on WTI crude oil. I know there are more currency pairs, more measures of oil, of course. So that's our technical segment for now. Let's see if there are any questions and continue. Thank you, Ramon, again from a good analysis. And let's continue. So we talked about events that we had so far, events for this week. Now let's move to the special segment about the elections. But before that, I'll remind you once again that FX Trade is back with a new edition of Trader of the Year. It's a demo contest, a competition sponsored by Hantic Markets. You can win Forex prizes with a total value of 16,500 USD. And you have the link here below and also in the chat box, fx3.com/info/contest. So here are the Clintons and the Trumps in happier days. And this week we had, of course, the first presidential debate. And, well, Clinton won. That's what it seemed. First, just sort of give some profile. We had in terms of polls, it moved between, at best for Clinton, it was 8%, an 8% rise, and at best for Trump, it was more or less tied, or 1% for Trump. Okay, and in the past 6 weeks, he's been catching up and reached once again a tie with Clinton ahead of the debate. Okay, he changed his staff. Clinton had a gaffe about the black basket of deplorables, health issues, and okay, so Trump improves, Clinton worsened, and the polls became extremely tight. In general, markets prefer a Republican, which is pro-business, pro-market. But in this case, Trump is a populist, anti-trade, stoking fear, lying, contradicting himself quite a lot, against Clinton, which is, well, very mainstream, gray. She's not going to rock the boat too much. Okay, maybe her victory will be, if she wins, of course, will be excellent for women's rights. But in terms of markets, it's not going to be a huge change. Probably not what it seems at the moment. Okay, that was the background for the debate. Debate held between Monday and Tuesday, and according to polls, Clinton won. 62% said she won. Maybe this poll was a bit biased, but in general, that's the impression of analysts as well. Trump had a good start to the debate. It was watched by some 80 million people. That's why it matters. But Clinton catched up. Trump lost his temper, sniffled quite a bit. Began rumors that maybe he's using cocaine or something. Anyway, Clinton was seen as the winner. She was calm. And of course, analysts say she won by points, not a knockout. But we've seen some reaction on financial markets. So stock markets immediately afterwards rose a bit. Things changed afterwards. There are other issues. The yen fell. Okay, the safe haven yen was in less demand, and the Mexican peso was on the rise. No wall with Mexico. Okay, the biggest question is, does the debate victory, and again, it's a small victory, it's not a total knockout, does it mean better polling? Better, probably yes, because that's what we've seen in history. And in addition, there's this bias where people who are sort of ashamed of their candidate in the candidate's bad week will not pick up the phone, and they'll be more eager to pick up the phone and talk to pollsters when their candidate is doing well. This goes, well, equally, I guess, to both sides. So we might see the pendulum swing. In any case, the change of trend was coming because Trump sort of reached his ceiling in recent weeks by tying with Clinton, and this is sort of a chance to move back to the mean. The middle is not 8% for Clinton. The mean is something like 3-4%, but more meaningful advantage. Well, currently, if we look at this, one of my favorite sites, 538. But if you also look at Real Clear Politics or others, you can see a very narrow range for Clinton. This gives her 55% chance against 45 for Trump. And in terms here of the popular vote, 46.6 against 45.3, 1.3% gain, which is marginal. Gary Johnson, the third-party candidate, the Libertarian Party, is losing some ground. It is expected to lose more ground because the race sharpens. Trump-Clinton, especially after the debate in which Gary Johnson was not invited to. Okay, there's also another candidate, Jill Stein. Talking a lot about US politics because it has more and more impact on markets. Okay. So yeah, there's another debate coming up, 2 more debates in October. And of course, post-debate polls will be coming out on Thursday. Watch out for that. It will have sort of a full picture of the post-debate world, all the polls probably on the Monday. We can see where we're standing again. Markets prefer Clinton over Trump. If uncertainty remains, we'll have, of course, more volatility, and it'll strengthen the yen. If she leads, it's better. Well, it's more risk-on, better for commodity currencies. Okay. Let's see if we have any questions and continue to the next segment. Nice picture of Trump and Clinton looking a lot younger. Yeah, it's a picture from Trump's wedding with Melania. It was in 2005, and the Clintons were invited and came along, and everybody had excellent clothes and makeup as well. Anyway, Trump cannot win, says FX ambassador. I wouldn't say that. Anything is possible. Remember, America is the land of opportunity. So I also think Clinton, I believe the polls and think he's a terrible candidate and therefore has a smaller chance of winning. But no, the system, he can win without the popular vote like Bush did. because of the system in the United States, with some luck, of course. And my assessment is that Clinton will clinch a very, very narrow win, and many people will remain frustrated. Trump will say it's rigged. It'll still be a divided House, Senate, everything. So everything will continue moving slowly. Basically, more of the same US politics that we're used to. Okay, but the face of the president does make a difference. It's still the #1 person, strongest man or woman in the world, so it makes a difference. Okay. So let's continue to the next segment. We're focusing this week on the Australian dollar, Aussie dollar, $8. In general, the Australian dollar is a risk currency. Okay, so if Clinton gets closer to a win, it's good for the Aussie dollar. If Trump gets closer, it's bad for the Aussie dollar. Same thing goes with wars, natural disasters, financial crisis, you name it. Australia's #1 trade partner is China. The impact of Chinese events has waned. Okay, so we see in the past we've seen GDP, industrial output, anything coming out from China having a big impact on the Aussie dollar. Not so much. Also, figures in China have been improving. So some stabilization, some stimulus over there. It doesn't rock the boat. Worries about China's hard landing have less of an impact. Mining investment continues squeezing, but it's still a large sector, still big capacity, it's still selling a lot to China. Perhaps growth is not strong there, but it's still churning out quite well. We had a lower Australian dollar for longer. This helped other sectors, other exports, so the transition is moving quite well. And there's a new governor in the the Reserve Bank of Australia, Philip Lowe. Philip Lowe, the guy here with the glasses, he was with RBA for a very, very long time. He replaces Glenn Stevens after 10 years. In his first big appearance, he said that they will not go nuts. Okay, that's the word he used about inflation. I mean, reaching the exact target. RBA has been on a path of cutting interest rates, and this could be a signal that a long pause is expected. No rate hikes, of course, but not a cut of the interest rates. Big questions that are open. How will high dwelling prices impact policy? Okay, dwelling, the word that they like more in Australia, also in the UK, I guess, for housing. So housing in Sydney is extremely expensive. How will it impact policy? If they introduce more macroprudential tools to curb the housing bubble, in theory, they can cut rates. Okay, but if not, it won't happen. If Philip Lowe does not cut more rate cuts, of course, the Australian dollar could rise. Okay. In any case, the Aussie dollar could be limited by a Fed rate hike in December, which is very much on the cards. All in all, we could see a bit more gains for the Australian dollar. So Philip Lowe, not Aussie Lowe. All right. Specifically, he makes his first decision next week. Before that, these are the big events coming up in Australia. Report on Friday. When I say Friday, it's the night between Thursday and Friday here in Europe. Private sector credit also on Friday. Also sort of forward-looking index, the Caixin manufacturing PMI that we mentioned before. Again, China has less of an impact on Australia. And well, during the weekend, while markets are closed, we have the official Chinese PMI from the government, a bit less important, and when markets are closed, but it could impact the open. A gauge of inflation. Inflation in Australia is released only once per quarter, so this independent measure, the Melbourne Institute inflation gauge, provides more insight. On Tuesday, it's a big night or morning in Australia, building approvals. And then the rate decision, the first rate decision for Lowe. No changes expected in rates. The big thing is, will he make his mark already on the first statement? Will he make changes in the statement? Will it be more hawkish? Will he signal no rate cuts in the near future? This remains, of course, an open question. Okay. Just to mention other events for Australia, we have retail sales next Wednesday and the trade balance on Thursday. Both events move the Australian dollar. Okay, so that's our segment on the Aussie dollar. All in all, it's been on the rise, and I think there's potential for a bit more rises. To conclude this segment, let's look at the Aussie dollar on the charts. So currently it's 76.80. Levels to watch 77, 77.40, and 77.65. The high mark is 78.40, the highest for the year. On the downside, 76.60, 76.35. That's a bit weak. 76, 75.30, 75, and 74.40. Even lower, 73. 75, but currently the trend is to the upside and ranges have become a bit more narrow. Okay, so that's the Australian dollar for you. Let's see if we have any questions. And yeah, so FX Investor Americans will wake up by November 8, 2016. Well, yeah, it's about 6 weeks to go, right? Should be interesting. So the next segment is preview for next week's events. If this week was a transition week, next week is prime time because we have the non-farm payrolls. On Monday, we have the US ISM, and it's the first hint for the NFP. The manufacturing sector is smaller than the services one, but still important. On Tuesday, of course, the aforementioned Australian rate decision. No changes expected, but perhaps more hawkish language. Kiwi. For those trading the Kiwi, we have the bi-weekly milk auction, also on Tuesday. Wednesday is a busy day with UK services PMI. It's the last of PMIs. We also have the construction and services and manufacturing, but services PMI is the most important one. We had a crash in July post-Brexit, a huge bounce in August. Now the numbers for September should be interesting to see if optimism prevails or not. Okay. Critical for the next move of the British pound. We have the ADP non-farm payrolls private sector report as a big hint also for the NFP. And then the ISM non-manufacturing PMI, the services sector measure, last month it was terrible. Let's see if it recovers now. It was a big warning sign. One of the things that convinced markets that there will be no rate hike in September. Let's see if we have a recovery now. It's the biggest sector in the US. Of course, on Wednesday, also crude oil inventories. On Thursday, US jobless claims. Even though it's not directly correlated to this NFP report, it's still a jobs figure and could have some impact. And, well, I jumped here. Oh, okay. Oh, sorry. And of course, on Friday, we have the non-farm payrolls. We'll have a preview for that. But in any case, watch out. The bar now is much lower for a rate hike. So if we have 150,000 jobs gained or higher and wages around current levels of 2.4, it should be good enough. Okay, of course, also long-term unemployment matters, the participation rate, things like that. It's also important for politics, not only for markets, but of course, the Fed will be watching it quite closely. For those trading the Canadian dollar, we have in parallel at the same time the Canadian jobs report. Okay, so that's the preview for the week of October 3rd to October 7th, first week of a new month and a new quarter, the last quarter. And yeah, so quite a packed calendar over there. All right, let's see if there are more questions, and then we'll begin the wrap up for today. No, still, I see the last comment is that Americans will wake up by November 8th. Okay. So this is the wrap up for the live market open for Wednesday, September 28th. All in all, things dominating markets are that we're still expecting a hike in December. The Fed decision is 1 week ago, happened 1 week ago, but still has echoes. Bank of Japan aftermath, still trying to understand what's going on, but dollar yen is moving quite a lot. Dollar yen is moving quite a lot also on the US presidential debate. Opinions say that Clinton won, not a knockout, but a victory. We'll have to wait for the full polls for the voting intentions, not just who won the debate, but does it have an impact to see the difference. Algiers Oil Summit concludes today. The oil forum, energy forum, and on the sidelines, of course, there are intense negotiations between Saudi Arabia, Iran, and Russia regarding some kind of a deal to stabilize oil market, as they call it, to freeze output, cut output, to make oil prices go higher. Quite busy day today. Let's jump to today's events. So we have durable goods orders today, important for the Fed. A testimony by Janet Yellen. Let's see if she says something she didn't say last week. Also, Buller talks. Mario Draghi appears before a committee in the German parliament, again, in theory behind closed doors, but this will, I'm sure, will have all of the possible leaks, and afterwards we'll have him speaking in public. And of course, oil inventories also to watch out for today, especially with the Algiers summit. Tomorrow, a very busy day. Big highlights are the CPI figures, inflation figures from Europe, and the final US GDP. No, sorry, I think that's Friday. Let me check if I'm not mistaken. Hope I'm not confusing you guys. In any case, quite a busy day also tomorrow, also towards the end of the month. No, I think I have the correct information. I confused myself for a while. Anyway, and pending home sales also tomorrow. On Friday, it's also busy because of end of month, end of quarter flows, final GDP from the UK, final Eurozone CPI, not final, sorry, flash CPI, and the Fed's favorite inflation figure. Yeah, that's the core PCE price index. In this wrap up, also let's cover a few charts. Euro dollar very, very stable. 111.85, maybe falling a bit now. Okay, we're seeing the dollar strengthen just a bit today, even more. If we look at the hourly chart, it looks a bit more impressive, but in the bigger scheme of things, we're stuck in range. 111.20 strong support, resistance maybe 112.80. Pound dollar slipping back towards 130, which it likes to hug. So watch out for 129.50 and 130.65. Dollar yen moving up, so we're seeing a stronger dollar. It's not risk off. 101, 100 to 101 are levels to watch at the moment. Dollar CAD 132.20, further resistance 132.40 and 132.80. Australian dollar, which we had a special focus on today, 76.72 is the current level, and 76.80 is the next. Oh, wait, no, sorry, 76. Anyway, and to the downside we have 76.60, and to the top side 77.40 as sort of the bigger lines. Kiwi dollar also moving to the downside, 72.67. 72 is a strong line, and on the top side we have 73.60. Okay, let's see if there's anything else important to mention in the wrap up. Watch out for headlines from Algiers. Watch out for polls coming out from the US presidential debate. I mean, how about voting intentions? Month-end balancing, rebalancing, if you wish, which FX ambassador mentions here. Kuroda is powerless. Yeah, I think so. Thank you, Luca, as well. Join the live coverage of the US GDP, and also watch out for well, I lost something. I had something in my head. Well, anyway. Yeah, of course, the FX Street demo contest. You have the link above. Yeah, okay, so I guess that's it for today. Let's see if the stronger dollar trend prevails. And so thank you very much, everybody, for coming, for the kind words, for the questions. And that's it for today. Wish everybody a safe and successful day in markets. Hopefully we'll have more action. We have action in quite a few currencies. Euro dollar, unfortunately, is not one of them. Okay, but you never know. End of month, political events, lots of data. Should be interesting. Okay, so thank you very much. See you and bye bye.